borders around issues of financial intermediation, banks like other financial institutions do have a critical role to play. It may not be entirely banking business per se, but we see banks also playing a greater role in the capital markets sector as dealers, for instance. So I think given that background, I just wanted to understand from your perspective ABSA's role when it comes to financial intermediation and how you see our capital markets development in the country.
Thank you so much. Like you rightly said, the banking industry play a critical role in terms of intermediation. And like the CEO earlier said, I think part of what you see is for the banks, our role is to mobilize savings, to bring them into a formal, in the market, but also just to try and ensure that you deepen the levels of liquidity in the market, but also to ensure that the investors do understand the risks that they are taking, but also to provide the necessary platforms that customers can use. And therefore, if you ask your question in terms of what ABSA or what we've been doing for these years, I think we see a long history of existence in this market from 1918 up to date. We've played a number of roles to try and bring development to this market. You'll be great to know that in 2003, then under Barclays, we started pushing the development of the fixed income market. So we went to the to the stock market. Then I think the CEO at that time was Mr. Mbaka. We issued a bond, which is a floating rate note in 2003. Again, we came in 2009 and issued another floating rate note, which was all these were 10-year programs. And basically, what we were trying to do at that point was to try and open up the market, provide a platform where we could begin to engage investors in all those two notes that we did. You'll be great to know that part of the participants were coming through from South Africa. So effectively, part of the information in terms of how this market was risks that existed in the market. But not only that, in 2012 and 2014, when the government issued the Euro bonds, we were lead managers, basically providing the skills, the expertise to support the issuance of those bonds. So basically, I think when you look at the other areas where we've been supporting the market is around ensuring that in terms of risk management, the levels of documentation that is required internationally are also brought to this market. And the central bank has been very supportive in ensuring that these through the various committees that we sit on, they will now begin to introduce this, because ultimately openness itself means people must understand what we are doing. But just to dive further into that, is one of the other things that we've been doing is the ABSA Africa Financial Markets Index, which we've been actually doing for the past 7 years. Basically, when you look at what that index tries to do, is to actually provide the investors with a lot of information in terms of what is happening, whether it the depth of the market, the levels of liquidity. You look at the accessibility to to foreign exchange and all those. So currently, if you check, there are currently about 28 countries that are now being featured on the ABSA African Financial Markets Index. Basically, we must, as a country, ensure that we work on ensuring that the regulations, like the CEO said earlier on, the levels of liquidity. People must be able to understand the levels of risk. The openness of the market is also very critical. And these are some of the things that, as a bank, we have been doing over all these years. Thank you.
Thank you so much. I think I'll come back to that. A key agenda item we're discussing, like I said today, is for Zambia to attain the financial classification. And I think we would like to get more insight into the Africa Financial Markets Index as it relates to that. Now, I think you've mentioned a few critical points. APSA, you provide a platform where investors can actually channel their resources towards our country for investment. And I think building on that, it is essential also in mitigating risks that we do have a conducive environment that not only promotes investment, but that also safeguards the investments of participants that are investing through the capital markets. Given that, I would like from a promotion perspective, this goes to ZDA. As a primary agency responsible for promoting investment into the country, what are some of the key strategic policy initiatives that you have formulated to create the necessary conditions for attractive investments into the country, from within the region or beyond the international borders?
Thank you. Feedback, but thank you so much for that question. Very important question. So as ZDA, quite a number of policy initiatives have been put in place just to see how investment promotion, can be enhanced, investment can be attracted into the country. So I'll start, for example, number one, with investment promotion initiative policies themselves. Yeah, so as an agency, we have developed a number of initiatives around investment promotion, right? So we've got initiatives around targeted promotional activities, right? So after we do our market research and we understand the market or the investment climate in Zambia in terms of which sectors are interesting, which sectors are key, and we also try to study the interest globally and the trends that are there. We get to understand which markets would really fit into the investment profile for Zambia. And so once we understand that, we carry out targeted investment promotions. It could be to particular, for example, countries. Maybe you target, say, China, or you could target the European Union countries or America, whatever it is, but depending on what you have studied. Or it could be targeted at sectors, like I indicated earlier. So again, when we look at the sectors in terms of the way they are evolving, is it around the trends, around the EV battery, for example? So depending on what is trending and what government policy is, we try to initiate policies and initiatives around that kind of activities. We also have policies around infrastructure development as an agency institution. So we, in terms of the mandates, additionally to what that area indicated, the ZDA has got the mandate to run and supervise special economic zones in the country. So we collaborate with developers of special economic zones, and we supervise and we guide, we provide the platform. We work with the investors and the developers and the promoters, including the operators in the special economic zones, to understand what is the key backbone infrastructure that they need. Is it the roads? Is it the power? Whatever it is, we've got initiatives around that, because we understand that investors would be interested in those particular infrastructure issues. And also, lastly but not the least, we have initiatives around aftercare services as well. So which ties in very well with the point from the CEO from SECIA, I call it on panel. So much as we want to do the investment attraction, it's not the end in itself, right? So when you come as an investor and there's an establishment of an investment in the country, we appreciate the fact that time and again, in the process of either implementing your project or even after you have already implemented and now you're operational, issues do come up time and again. Maybe initially, as you came in, you brought in quite a number of experts, and then visas start expiring, there are issues of immigration and so on that we resolve as ZEA, as part of our mandate. It could be issues around, maybe to do with policies that are not working very well. We do provide, support in terms of trying to reform some of the policies that may not be very attractive to the investors, so to say. And also, okay, right, and also, right, thank you. So also additionally, we have initiatives around provision of incentives. Now, to us, incentives are very good, right? But it's not the beginning, neither is it the end in itself. But of course, it's one of the things that we do. We do provide incentives. There are certain incentives that are provided for in the ZEA Act and in the ITPD Act, Investment Trade and Business Development Act, of 2022, right? Which can only be accessed via registration with the Zambia Development Agency. And so we do have, again, policies and initiatives around how we could make it easy for the investors to access those incentives. Some of the policy initiatives that the ZEA, of course, there are many, the list is not exhaustive, but these are some of the key ones that we have come up with around that matter. Thanks.
Thank you, Mr. Ketani, for that comprehensive feedback. I would like at this point to welcome our panelists from the LUSA. I will ask her to introduce herself. And also, as soon as she does that, I would ask that you please give us a perspective, a high-level perspective of the LUSA's mandate with respect to the subject matter.
Thank you so much, Mwanga, for that. My name is Namnyuka Jared. I'm the acting legal counsel and company secretary of the LUSA. So in terms of the LUSA and its mandate, I'll start off by just stating that the LUSA was formed out of a government initiative to basically encourage private sector participation in the Zambian economy. As part of the formulation of the LUSA, part of the objectives were, of course, to empower the Zambian people on the one end, but also to bring in investment, foreign investment, as well as local investment into our investment space. One of the key things that the LUSA does as part of its mandate is to provide a platform, a fair and efficient platform through which securities can be traded on the LUSA. It basically does provide an option for investment in capital markets. And as you look at it, the LUSA is the principal stock exchange in the country. So it is, in terms of this particular theme and the topic at hand, to reposition the capital markets goes hand in hand with the LUSA, because the LUSA then needs to be looked at as a preferred destination in order for the capital markets to be looked at as a preferred destination. So in that regard, I think one of the key things that the LUSA does do in this regard is to ensure that the local market itself looks attractive. It's developed in such a way that once it's developed, it's then able to attract the international forum, it's then able to attract international investors. So in terms of repositioning the capital markets, I think one of the key things in terms of the LUSA's mandate is that it is the principal stock exchange, and without the exchange, we have no capital markets.
Thank you for that introduction. With what you've given, how would you say the performance of the markets have been over the past 3 to 5 years? And how has that impacted on the perception of our country in terms of being a preferred investment destination?
Okay, thanks for that, Mwanga. In terms of the performance of the exchange, I'll start by saying that we've seen significant growth throughout the years. we've seen growth not only in terms of our market capitalization to GDP, but also in terms of our investor base, both foreign and local investors, institutional and retail. And I think I should emphasize that over the years, we have seen a huge portion of growth, especially in our retail investors. Our investor base in that regard has really grown. In terms of our market capitalization to GDP, I should state that we did reach our 100 billion kwacha mark in terms of market cap to GDP, and we have actually proceeded to hit that mark. So we're now above 100 million kwacha. And I think that is evident of the great performance of the market throughout the years. And I think I should state that because of that great performance, because of the perception, we have seen a lot of foreign participation on the market. I'll give 2022 and 2023 as an example. So in 2022, our annual turnover from foreign investors, they attributed 44%. But in 2023, they attributed 77%, which is a big jump. So then you're able to see that the foreign market is also looking at the LUSE. The LUSE is then being looked at as a preferred destination. It's then the perception and the performance, the stability within the market has brought a number of foreign investors to want to participate on the market. And I think I should also state, Mwanga, that we have received a lot of interest generally within the region and as well as post the region in terms of fund managers and investment advisors that then want to bring their portfolios onto the Zambian capital markets. So in answering your question, our performance as the exchange has steadily grown. It has been significant, and it has grown in the most important respects in terms of investor base, as well as in terms of our market cap to GDP. And this has brought about a lot of interest on the Zambian market capital space.
Thank you. I think that's news worth to note. We're certainly, in my view, making a positive stride towards positioning our country as an investment destination of choice. Probably need to do more for the local participants. Back to CEO, Mr. Stan. To touch on the CMMP, are you able to just extrapolate on the CMMP aspirations? And I think you could place some primary emphasis on the aspiration, which I think is categorical for us to have as a first milestone. Again, this has to do with attaining the proposed Morgan Stanley Capital International rating, the frontier classification, and how you see the SEC as the secretariat and co-implementer for the securities, as the Securities and Exchange Commission, to push the agenda on capital markets development. How do you see potential collaborations coming into effect, especially that the CMMP is a cross-cutting topic?
Thank you, Mwanga, for it's a loaded question, and it goes to the core of why we exist as the Securities and Exchange Commission. Development of the market, like I said in the opening remarks. Statistics that are given by the LUSE are interesting, but if you go to the capital markets master plan, I think we've tried to go and look at a broader and bigger kind of objective to join, let a country be classified as a frontier market within the Morgan Stanley Capital International. I was actually checking the statistics this morning. There were some interesting countries like Niger and Burkina Faso, and immediately I'm like, wait a minute, where are we as Zambia? Why are we not joining the Morgan Stanley Capital International? I checked on some of the statistics or benchmarks or goals that are required for you to be admitted. We appear to have missed the pass to some extent. 2, 3, 4 years ago, all we needed were 2 companies listed on the exchange, valued at about $700 million. When I checked this morning, you now need something like $1.2 billion. And I immediately went to the exchange to see the statistics. The largest company as of the time of checking. Statistics, especially with prices change every time there's a trade, is a CEC Africa, CEC Africa, CEC Zambia, which is valued at about 18 billion kwacha, which is just about $700 million. So how do we get to have two companies listed on the exchange valued at 1.2 billion? So we need to do more as a country to see that we are in terms of what with respect to the listed companies. With the developments at CEC, them investing in renewable energy, maybe we may actually just get to increase the market cap. And CEC has been phenomenal in terms of pricing. 3 years ago, a share at CEC was only worth 10 well. It's now worth something like 11 kwacha plus, which is a quite significant growth. But we need to do more. Then we also need to, in order to join that club, the turnover ratio needs to be at least 2.5 times. We are seated at less than 1. I think we are seated at something like 0.00 something. I was discussing with my colleagues just before the panel. We seem to be doing better in government bonds, where last year, I think 50% of outstanding government bonds traded in about something like 6,300 trades, which was very significant. I remember chatting with World Bank colleagues who told us that not more than 10 trades happen every month, but we do on average about 30 trades in various government securities on a daily basis. Because this is statistics that we are getting on a daily basis, and in our morning briefs that I said, we get to analyze and get to understand this. But why do we need to join this Morgan Stanley Capital International Group? I think it's a perception issue. It's a perception issue in the sense that when investors out there are looking for a destination for their savings, there are particular benchmarks that are required. I think it makes it easier. From a local perspective, I'm sure most of the pension funds are more comfortable with a listed company. But then governance and other control measures in that particular entity will be guaranteed. So equally at an international level, or foreign savings as we call them, are using that as a benchmark, as a minimum benchmark to even consider sending money to Zambia, then it becomes easier. I think this fits into our aspirations to have Zambia as a preferred destination, especially in the region. I couldn't see, closer to home is probably Kenya, as members of the frontier market, Zimbabwe, Botswana, everybody else. I'm not sure, but I cannot recall seeing any of our neighboring countries. So if we become and beat other countries, then Zambia becomes a preferred country. I don't want to ride on our political stability. I keep telling guys, we have had like, how many presidents now? I can't even count. So we have a successful political transitions with very, very guaranteed stability. But we need to get dividends out of that by ensuring that we attract a saving. But we have to do more as a country. There are 3 distinct classifications that we need to do. On the economic side, we don't need to do anything. But on the efficiencies from the securities market, we need to do that and ensure that we build these billion-dollar companies. Either they're listed, or if there is a big company that is not listed, then the Lusaka and other market players like the banks and my colleagues here have to do more in attracting these businesses to listing. The last and important point is liquidity. Money appears to only go where there is some form of guarantee that first, the value will not be eroded. Second, that it's easy to take out of value. So if a company is not listed, how do you get out? You have to find maybe one of your colleagues who are shareholders to buy you out. And usually valuation becomes a debate. Do I sell back to two kwacha, and maybe I'm saying 3 kwacha, and you only want 1 kwacha? Liquidity becomes a very, very important aspect. So the markets collectively, of course, as part of our mandate of market development, we can work with the market to ensure that that Morgan Stanley capital international target is reached. So we should be reviewing, like we do at the office, these goals on a daily basis. You know, are we at the 1 mile mark, 2 mile mark, or things like that, so that together we can work towards achieving that. It also becomes easier for the government to raise money, because then the market becomes a little bit more trusted, and foreign savings can easier flowing. Let me end there for now.
Thank you. And it's as though you read my mind, because the next question is posed to the market, both the Lusa and APSA. I think when it comes to attaining franchise classification, the criteria becomes very critical. And how do we better prepare ourselves for the market to work towards that criteria? I think at the time of CMMP development, like CEO mentioned, it was the $700 million of market capitalization by 2 companies. We had $53 million total free floats. And obviously, proper infrastructure needs to be in place, a well-functioning CSP. So I think from your point of view, Mr. Name, what are some of the considerations that we should place emphasis on towards meeting some of these criteria, which evolves? So it may not be $700 million in 2020. It's now $1.3 billion. Next year would be demanding us to do even more. So what are some of the considerations we should focus?
Thank you. Thank you so much. I think, like the CEO has said, there are a number of benchmarks that we need to meet. And for the investors out there, they are looking at several countries. And among those several countries, they are always searching for information. I think the question is, are we providing enough information to the investors so that they understand the risks, they understand the opportunities? And this is part of what we've been doing, I think, over a period of time, that APSA has been doing a lot of market research. And I think you may have seen from time to time that we bring our research team from South Africa. They come and they interact with the customers, our investors, but also it provides a platform where the investors actually have the opportunity to understand what is happening in the market. But we also do what we call customer education in forums, where we provide customers with a lot of information in terms of what is existing, the products that are available on the market, the platforms which they can use to access the product, and how in any economy there are risks. How can these customers mitigate the risks? I think one of those is the levels of liquidity. To what extent can you go into the market and come out? What are the regulatory frameworks that exist? Issues around enforceability whenever there are disagreements. So those are some of the things that that needs to be looked at. And obviously, like the CEO has said, I think once we attain lower levels of inflation, like you mentioned, in terms of if you are a retiree, the inflation should not necessarily erode your savings. And you see the central bank has been really fighting to ensure that inflation is kept in check. So with all those, for the past 7 years, like I earlier mentioned, APSA Africa Market Index was launched, and primarily to provide information to investors locally and abroad, so that they are able to make the right choice. If you will allow me, if I can just go through some of the key issues that we look at through the index. The first one is the market depth. The market depth means if a client comes and they want to move out of the market, is there enough liquidity for them to to move out of this market and sell? The next one is the access to foreign exchange. For us, I think it is a tick because we do not have any foreign exchange controls, and therefore the issues of availability, the levels of international reserves, these are debatable whether it's something that can actually make an investor to think twice. But our foreign exchange environment is really liberalized. The second one is transparency. The issues around tax, what are the tax levels, all those things are things that an investor, because that too impacts their overall return at the end of the day. The regulatory environment too is one of those things that that's the availability of financial information is very critical because believe me, in trading or in investing, you trade on information. The information must be readily available. The policies in terms of how you enter, you exit, the access, some of the things that the DA has mentioned in terms of some of the promotions that they are doing. I think all that information must always be packaged so that it's easily accessible by the by the investors. But also, I think from a local investors' point of view, we must ensure that we push through capacity in terms of either knowledge, capacity in terms of comfort in the local investors actually to raise capital through the stock exchange. But also, I think in terms of the legal standards as well. So you cannot attract investors with the laws or regulations that are so different. And if you look at some of these regional integration efforts that are being made across the continent, it's actually meant to harmonize some of these legal frameworks, and I'm sure the lawyer here will be able to articulate those in a favor. So those are some of the things that I think for the investors, and for us to achieve that benchmark, we must ensure that we are actually aligned across because we are competing. This is competition. There are so many other countries that are competing with us. And I was also just looking through in terms of the various indices that are being traded and where some of these organizations are actually pushed through in terms of which country is in which bucket. Believe at any given time, we are putting buckets, and depending on those buckets, that's how capital flows will actually flow. For example, in the first half of this year, if there's an IMF report which was published, if you remove China, $110 billion actually moved to emerging markets. Of course, one would argue that the frontier countries are slightly below the emerging markets, but we are all in that basket. It's just issues of how one institution creates us. So, and therefore, the issues of how we prepare, how we disseminate information, the issues of how our legal frameworks are aligned is very critical for us to attain that benchmark. Thank you.
Thank you. I think the information provided is very insightful, and I do agree. Most of the items that you mentioned as being cardinal actually are development areas in the capital markets master plan. Issues of enhancing traditional securities markets, for instance, to make our markets more liquid and also provide for that whole functionality to enhance the regulatory frameworks. And also we see that the CMMP touches on aspects of having on board your innovative product and so on. Now, my question particularly goes to the user. Firstly, the CMMP does identify you as a key stakeholder across the 5 development areas. And my question particularly has to do with work towards building a pipeline of potential listing, both through equity and debt. How do you see your role in that space? And also, are there any insights that the LUSE is already thinking through in terms of building on what Mr. Fernando said, the regulatory framework? If you look at the current listing requirements, is there scope to consider adjusting the regulatory framework around listings and so on?
Thank you so much, Mwanga, for that. For starters, I think I should state that in terms of attaining our frontier market status, in terms of being a prepared investment destination, I think it's key in terms of what both the panelists have mentioned to look at where then we can make improvements. Improvements in terms of regulation. I would agree with my other panelists that in terms of foreign investors then that want to come onto a market, they'll look at your framework, they'll look at how regulations sits, they'll look at how protected they are at the point of exit, they'll look at how stringent the requirements are. In this regard, I think one of the key things that we are doing to get to that point in line with the CMMP is to review all our rules and our regulations, as you say. In terms of whether it's our trading rules, our listing rules, our CSD rules, we are having a holistic review of our rules, which we intend to start during the course of this year. And what we intend to do is to align, of course, with what our market needs internally, but also importantly to benchmark on other markets, how they are faring, how it has helped them, and bring those back to Zambia and customize them in terms of our capital markets. I think one of the other things that we do want to do in terms of our role in getting to a point where we're prepared investment destination, one of the key things is awareness, as has been previously stated. I would actually even commend the Commission. I have seen a lot of awareness in the recent past in terms of the capital markets, what needs to be done. And I believe the LUSE has equally followed suit and has raised more awareness. As he did state, if you don't have the information, and if investors don't have the information, they really will not know what exactly the offerings on the market are. And I should just state that the LUSE has got a lot of opportunity. The capital markets has got a lot of opportunity. An investor thinks of the capital markets, they should know that there's a wide variety of products for them. There's a REIT, there's a green bond, there's an ETF. I've seen the SEC provide the new ETF guidelines. There's so many products that can be brought onto the market, which then bring us to a point of being a prepared destination. And I should state that we have finished compiling our 5-year strategy. And one of the things that we have strongly highlighted in our strategy is the need to align with the goal of the CMMP to make Zambia an investment destination of choice. And one of the key things in there as well that we have brought out in terms of our 5-year strategy is the need for more listings. We have been very intentional as the LUSE, going out to look for companies to come and list. We continuously have been having courtesy calls with company after another to just be at their door and look and say, listen, there's the capital markets. And I think one of the things that we are strongly pushing out there is, listen, in terms of equity, it's very easy to raise capital because then you can expand your business without the stress of having to pay back debt. And this is something that needs to be pushed into the public, awareness raised in terms of the fact that people can actually raise capital in the capital markets and it's stress-free. You're able to expand your business, you're able to grow. And in terms of awareness, this is something that we are very strongly pushing. We're looking for listings actively. We're diversifying our product portfolio actively. And I think one of the other key things is liquidity, as has been stated. Liquidity is a big challenge. There needs to be more liquidity on the market. And we are intentionally bringing about strategies, even just to engage institutional investors to offload more, to create more liquidity on the market. So these are active engagements that we are having so that then once our market is grown, once our market has liquidity, once there's awareness, people, even in the foreign space, are able to look at the LUSE and say, this is an investment destination of choice. They're able to come onto the capital markets and do that. And I think all these initiatives, even in terms of growing our listings, we'll still go back to meeting the targets that Mr. Chitabi did stick to in terms of being a frontier market. So I think just to state that the LUCE's role is very critical in the process with the help of the Commission and other market players. But what is key is the fact that the LUCE has begun in our 5-year strategy to push very, very strongly towards the achievement of the CMMP.
Thank you so much. Ladies and gentlemen, we are almost at the tail end of our discussion. I had one more question for Ms. Kanketani, but I'll allow Ms. Kankanama to make a submission.
Yeah, so I think just in addition to what the other council has said, I think one of the other things that we need to look at, which is basically the Commission, we say, is the cost of issuing, for example, debt on the stock exchange. I think my experience from the past issuances that we did is I think the cost sometimes is a little bit high for an investor. You have to pay to SEC, you have to pay to Lusaka Stock Exchange, you have to pay the broker, you have to pay your accountants, you have to pay the guys that are the legal, you have to pay the central depository, you have to pay the calculation agents because the issue of valuation becomes key. So when you add all these, and then you ask yourself, if an investor will actually just give you a bit, it becomes cheaper for the actual shareholder or anyone to actually push it. So perhaps in terms of part of this overall valuations, I think it's also to consolidate, for example, to say, if a person is coming to list on the stock exchange, there has to be an understanding with all these other stakeholders that provide services towards the listing or issuances so that the cost must be affordable. You can put customers in various classes, but that becomes a key issue. But the other one is also I think in country, the issue of credit rating seems not to be a bigger issue. But I think for anyone coming to partner with the other people to go into a company, I think first of all, they need to understand what is the credit standing of such entity. So it's something that whether it's through policies or through encouragement, is some of the things that I think with time as a commission, together with perhaps the bodies of accountants, to begin to see how best that can also be addressed. Thank you.
Thank you. I think you raised a critical subject matter. I think it has been in the market for quite a while now, the issues of cost discharge. I would put Mr. Stalu on spot. CEO, did you have any sentiments around the prevailing fees? I know we do have in the capital markets master plan regulatory funding model as a development area, and that not only includes the SEC, but broadly speaking to capital market operators. So I would like to get a perspective from SEC and LUCE as well.
Yeah, I think you're putting me on the spot, and this is something that is cardinal in terms of developing the market further. You may wish to know that we've been doing studies around the cost of debt. All these professionals that my colleague has spoken about, a requirement of the law. The question is, how much should they charge? One of the biggest debatable issues has been most, if not all, other than the private sector individuals. And as a country, there's absolutely no price control. So the question is, should we regulate how much a private sector entities should be able to charge? It's a very, very debatable issue. But as we do the capital markets master plan, I think it becomes easier to sit down around the table and say, what do we need as a country? Can we regulate ourselves? But it's very, very difficult to introduce regulation around cost. Because what comes into debate is different firms have different cost structures. You may have a firm with, can you imagine if the four of us were to form a firm with all these years of experience I've read here, probably our cost structure would be high. Another firm may have recent graduates with less expectations in terms of salary than ourselves, and their cost structure is low. So then, how do you tell all these two firms to charge similar fees with differences in experiences and what they're able to bring to the table? But speaking on behalf of the Commission, we are ready to fix, for instance, the charges. We have a law that is with the Ministry of Justice, where we put a cap as to how much should be paid on registration, so that we encourage large figures to be registered. And if we are putting something like 2 million kwacha as a maximum cap, so even if you came and raised $1 billion, you still just get 2 million kwacha. We've gone on to the region and beyond to get to see how other jurisdictions have restricted this cost. One particular country is Kenya. They've got a cap, something like $125,000. So regardless of the size of the ticket, they will not charge you beyond that. So it encourages the market to issue large ticket securities. But what we did as an example for the green bonds, we reduced our fees by 50%, something like that. So instead of your usual 0.25%, you will pay half of 0.25% for the green bonds registration. This is part of our market development efforts. So yes, we are ready to reduce the cost. But if I can actually extend the thought beyond just reducing the cost, if we attend 2.5% liquidity margins, that means more transactions. That means we could meet salaries of everybody on the market with the lower rate if the number of transactions increase. Look, out of the about 118 billion of market cap, less than 1% trades. So can you imagine if I got 10% of market cap trading, then I could charge lower fees and still be able to meet the operation costs. If we could reach the levels of turnover ratios that we have on the bonds, that 50% of outstanding government bonds get to trade, then we can easily reduce the cost. But finally, as part of the CMMB, we are trying to say, can the market sit down with the SEC and agree on the funding model for the SEC? We should never, ever have regulatory agencies like ourselves to be profit centers. They should just be expense centers. So if we can meet our operation costs, that's enough. As long as that is guaranteed that year in, year out, you'll be able to pay your gratuities, your salaries, your rentals, buy fuel, and everything. That's all a regulatory agency needs. We do not need large reserves if we have a guaranteed operational budget being met.
Well said. I hope Konami and some